Welcome to Inside a Trader's Mind. I am your host, Kyle and I'm here with Sammy Tovar.
Hey, everybody.
This week, we're going to talk about fractional disparity. Fractional disparity.
Wow.
One of my favorite things to use to get multiple pips, I think, in the market at the same time on multiple pairs, doing the same or the opposite things. It's actually pretty wild. There was actually a great example of fractional disparity today or yesterday or today in the market, of a
100%.
few different pairs. The euro and the Aus and the pound all kind of did like the same type of pattern right off of the 800 on the 15-minute chart.
Right.
Your moving average. Yeah, and it was pretty cool. This nice double top, went short right in London.
Yep.
So,
and like, I think I have a few slides in a couple minutes we'll go through to talk about it a little bit more. One of the things, what's really cool in Forex, and this is like a lot of investing, but what's really cool in Forex in particular is like, there's so many hidden efficiencies like this, right? Where you're like, once you learn how to do something really good and you're like, there's like, trust me, if you can trade this, a method really solid, there's probably 3 other ways to make money off pips or make more pips off of what you're doing in the background you don't even know about. And fractional disparity is one of them. But it's like, I'm going to preface this entire podcast with, if you're not solid performing like just one pair at a time, don't even attempt this at home, kids, because you will crash the plane into the mountain,
Absolutely. Yeah, this is, so like, fair warning, this is a advanced trading method that you're going to use with your current strategy or whatever strategy you use.
100%.
This isn't something you just like jump into like, oh, fractional disparity. Like, first off, what even is fractional disparity? Sammy, why don't you tell us what fractional disparity is?
All right. So in a nutshell is, there's, let's jump into I prepared a couple slides to kind of, it's probably much more esoteric if I talk about it versus if I have a concrete thing to show it. So if you want to share your screen really quick, we'll just start with the first slide. It's really easy to explain that way.
Perfect. Yeah. So if you guys are watching us on YouTube, you'll be able to see the slides that we're putting up right now.
All right. So fractional disparity. Now, like I said, this can get like very, I guess like 3-dimensional is probably the best way to explain it. So let's start with just like this example. So you have the euro yen, and the key with the euro yen is you have a base, which is your first currency in a pair, and then you have your quote, which is your second currency in a pair. So let's say you're looking at euro yen and pound yen. All right. Well, there's a control pair in this instance. It's the third pair, right? It's almost like the third mind, and that's the euro pound. All right. So now if you take a look at that for what it is, there's some considerations that you need to make when it comes to fractional disparity. And that really starts with understanding there's 3 pairs. That's your trinity. That's like what you're looking for, right? But it's understanding what is happening on each pair. Okay, because if 2 of these pairs are moving and a third one isn't moving, then you got some good fractional disparity going on. If one of these pairs is moving and 2 aren't, then there's something else going on. Okay, so you have to also understand what is happening with each base and what is happening with each quote, right? So in this case, maybe like today, the euro yen and the pound yen came screaming down. So I looked at the euro pound and it was kind of chopping, right? Maybe it shot up and down a little bit eventually, but coming into this day, like we must have had a really strong yen and a really weak euro and pound separate as bases. So you have to understand each part. Really what you're looking at here is you're looking at euro yen as a pair, pound yen as a pair, euro pound as a pair, but then you're also looking at the euro on its own, the pound on its own, and the yen on its own and how it's performing, right? So once you can identify the control pair and you look at the trinity, then it's like, okay, does this disparity move together or does it move apart? All right. So now let's just say we had a super strong, like long euro pound. All right. And let's just say because of that, we had a long euro yen. So we got our euros really strong, right? But maybe our yen isn't so strong and we have a weak pound, right? So that's going to be a pound yen that maybe is falling a little, or it's just neutral, it's just chopping. My personal favorite is when one of these pairs is just chopping, like it's like compressed in like a 20-30 pip range. And I like it personally when I find the pairs, and like, for anybody who's listening right now, last year, like one example that pops into my head really clear is I like the pound Swiss against the euro pound, because the euro Swiss is typically pinned together just institutionally. They don't try, they like, they move in sync pretty much. So like last year on a daily chart at the beginning of April after Q1, we bottomed out on euro pound and we were topped out on pound Swiss. So as pound Swiss fell, euro pound was shooting long. And I know that's kind of hard without seeing the charts, but go back and look on a 4-hour chart. You'll see right when those things rose and right when they fell together. Hit the next slide and I can kind of like, show a little bit more what that looks like. Okay, so here's the example from the previous page, right? So are all the euro as a base? This is now we're looking into the actual euro pairs, all the way euro Aust, euro CAD, euro pound, euro yen, euro New Zealand, euro dollar. Are those all falling or are those all rising? Okay. Same with the pound. Go over and look at the pound as a base. All pound Aust, pound CAD, pound Swiss, pound yen, pound New Zealand, pound dollar. Are they all rising or are they all falling? Because when that's how you determine the fundamental strength of a base or a quote. Now we can go back and look at the JPY across Aus yen, CAD yen, Swiss yen, Euro yen, pound yen, New Zealand yen, dollar yen. The quotes are all on the back, right? It's the second currency. You go look at all of that information. This is why, so pardon my language, but you should not be fucking with this if you don't even understand how to trade one pair correctly or efficiently or consistently, because this will just blow your mind. But it's when you can put this context in, and then you look and see, like in this example, how is the control pair behaving? Is it just chopping sideways, right? Or is the disparity, like I said, is the disparity moving apart? Like in my example, I had the pound Swiss was moving short and the euro pound was moving long. So I was seesawing, right? So, but I knew that, like, because my euro Swiss, I should have put that on this slide instead, but my euro Swiss was just chopping. It was just channeling.
Yeah.
And then like I was at the high of the year and I was like on the high on the 4-hour chart. And I just extrapolated into that beast of a trade, and that's the hidden efficiency, right? And really it takes a ton of behavioral flexibility and sensory acuity. You have to be looking at stuff like on all these different angles, and you have to grow into it. Like Kyle, you're really lucky you grew into it. You trade professionally, though. A lot of people, like, they don't have the time to pour in that knowledge and know what to look for, right? I got one more
so we can help them.
Yeah.
But actually, before we go to the next slide, actually get something to add to this. So I found, just a little tip, I guess. I found the best time to take advantage of fractional disparity is after a bank holiday.
Oh yeah.
After a bank holiday. So if we're looking at today, like perfect example today, there's many different pairs between over the pounds and the yens that moved. The pound moved short and the yen moved long. Right. So we had multiple different pairs shorting with the Great British Pound today. So but yesterday was the bank holiday. It was what was yesterday's holiday? Was it some holiday?
Martin Luther King.
Martin Luther King. Oh yeah, Martin Luther King Day. So bank holiday for the US. It stayed in, like you said earlier, it stayed in like between a 20 and 30 pip range.
Yeah.
And then I knew, because I could see towards the end of the day, the moving averages and the Bollinger Bands were compressing on the short time frames. And I was like, this is going to launch tomorrow short in London. Like it went, like every one of them gave you almost the same pattern on all across the board on most of these pairs.
Yeah. So you came in off the high of the day. I mean, everything was locked in. Now, That's this exercise literally on this slide, what you just said. You went through, you knew all the pounds were falling.
Yep.
You knew all the yens were the yens as a quote were rising, right? So now your job becomes go look for the hidden efficiencies, take the number one, take the strongest move, and then go look at the trinity. Go look at the three pairs and see if you can catch the backside or another move, right?
Absolutely, yeah. And
Now,
if you can catch the short, if you're going short, if you can catch something going long on a different pair,
yeah,
that's also pretty cool. I mean, it's nothing
totally.
really different between taking another pair short, but I think it's really cool
Right,
when you're able to buy and sell on two
right.
different pairs using this type of method.
And this works. So, like, hit the next slide really quick. And this works every pair, right? So if you're looking at like pound CAD, right? Pound dollar US CAD. So here's a really good another example. Let's just say pound CAD, man. Sometimes you look at charts and they're just chopping around, right? That's your control pair on the backside of this move. So if pound CAD maybe is just chopping, right? But US CAD is like slamming down, and pound dollar has they all have to have data before you make a move. You don't just jump in pound dollar long without a pattern, right? And without data, right? And I think the next
100%.
podcast we're going to talk about checklist.
Oh
But
yeah, we are. I can't
these
wait
are
for that
those
one.
weird things, when you teach this stuff and when you learn this stuff, it's like one thing. You never make a decision in forex based off one thing. You have to have context. You have to have a rich environment of data because you're creating a model of high probability,
Yep.
right? So in this,
Absolutely.
yeah, in this example, we're looking at, are all the pound bases rising or falling, or are they chopping, right? Are the US bases or quotes falling or rising? And that's like, this is where you come in and you start looking. If you have like a multiple time frame bias journal, you can look at that. If all your arrows on your trading plan, your journal, are pointing up for this pair, I can look at it on one piece of paper. That's why I designed it that way. I don't want to look at all the pairs. I want to just look high level. Where am I going? Well, everything's pointing up or down, right? So now I know. And then I can go in and look and see, okay, wait, all the yen quotes are falling and all the like majors, the bases are rising. So here's what we got to do, and that's how you catch the back of these. Now, that's the other part is, how is the control pair behaving, and is disparity moving together? In this case, it's moving divergent. You have a pound dollar long and a US CAD short, which means you have a weak dollar, right? And a strong pound. Now, here's the deal. There's an evil part to the backside of this, and that is equity, like managing your money, right? Like,
Yeah, I feel like we
how many
just talked
times,
about that.
I know we just talked about it last week. How many times have you sat there? I know I a million times I sat there and I'm like, I'm scaled into this beautiful trade, and I know the fractional disparities running on the backside, but I just put all my equity into this trade. I always have three bullets to shoot, but it's still
Yeah.
like, dang, it's just like, when this market gives you on a silver platter these efficiencies, like, really have your head together on how you're going to manage your money, because there's a lot. Like,
Yeah, this
I think you had the F word in the the notes for this,
there's a fucking lot.
dude. I know. I just tried to smash through this. This takes a long time to learn. Kyle, how long did it take you to learn this? Like, for real? Like, if you were
Man,
like,
I think I just finally got proficient at it like maybe 6 months ago.
yeah,
Like was the first time
so
I'm able to, like, because not only do you have to manage your equity, right? Because you
right,
can't, if you sink all your equity into one account and one trade or one pair, you're not going to be able to take those other ones. What
right,
you want to do is you have to work through a trading plan. How many pips do you plan to get from this? Like, are you cutting it off at a certain thing? So I'll tell
right,
you what I do is I go for 40 pips, right? If I've done my analysis and I know that I'm going to take trades based on fractional disparity, what I'm going to do is I'm going to either cut the lot size in half or a quarter, and I'm going to take this and I'm going to go for like 40 or 50 pips per trade, depending on the pair. That way
right,
I'm massing, instead of, like a 1-to-1, maybe like a 1-to-2 or a 1-to-3, across all of these pairs, like a
right,
winning ratio. So I'm
totally,
winning 3 times what I would normally win on a single trade, if
yeah,
I just sunk it into a 40 pip
right,
single trade.
right,
You know?
totally. this whole thing, this I was real hesitant to even talk about this because I know like it's a pretty complex equation
Yeah.
and there's a lot to it. But the reason I think it's important is so that people know when you master like your method or our method, the key to the whole thing is there's so much more opportunity on the backside of this, right? And I don't
Oh,
even actually,
absolutely.
this isn't even a module in our inner information because it's so like just first learn how to trade and then we'll work you through this kind of process because it's so it's deep, man. And you got to walk before you fly, I guess, right?
Absolutely. I feel like I also feel like I actually feel like our method is the best for fractional disparity
Oh,
because
100%.
you see that the patterns that we go over in our method and coaching, you see the
Totally.
patterns, those patterns show up on all of these different pairs. And like
All of them.
once you see them enough, man, you never forget
You
those
don't. You
patterns.
don't. If you see a double bottom on euro pound and a double top on pound Swiss,
Mm-hmm.
they're doing this. And it's just like, boom, I'm in it. I got it. I don't even like it's just like it'll turn into clockwork. Like for you, okay, just 6 months ago, it really started clicking. Like I met you 2 years ago, man. So like
Dude,
it took a
yeah.
year and a half of really knowing what you were doing to take advantage of this. But that's my point is on the horizon, these hidden efficiencies are like everywhere in Forex, and there's a lot of gold in there.
Absolutely. Actually, while we're here, I do want to show a quick for all those watching on YouTube, I want to show a quick example of what we're talking about in the market. So if you guys could take a look, so pound yen, one where we're talking about. So this is the one I took along with pound yen. So we have this nice double top pattern here.
Yeah,
Euro yen, same exact pattern, same exact time,
there it is.
right? Check this
Yep.
out.
It's all there, dude. It's all there.
And we got
Pound yen, euro yen.
USD JPY, another one
Yeah.
right in London. This one doesn't offer you a lot of pips. 40 is pretty good if you get out of it. So most of the pound and the euro pairs, anything attached with yen on it
Yeah.
was perfect. So we even get another
So
one on CAD yen.
that's a
Gave us
good
another double
example
top.
of all yens as a quote.
All yens is a quote. Yep.
All the pairs with JPY on the back were shorting, which means your yen was fundamentally the strongest currency.
Yes,
So when
exactly.
you get that in your head, all you got to do is swing through all the pairs that end in JPY, and boom, you take the pretty one, right? You're
That's what
like, hey,
that's what I love to look at. So we had like what it's so you and I use special tools for this particular, like to find, which currency is the strongest. But if you didn't have these tools, here's a good way to take a look at it on how
right.
I identify these. So we actually start to see on like, even if you go to the day chart, right? So this is how you'd figure out that the pound is going to short. So we know overall, if we're looking at the majority of the pound pairs, we're going to take a look and see the major ones that are mostly traded. They're all going to short. So we have this giant double top and we even have this small one in the day chart. So we know at some point it at least has to come back down to the 50 moving average, or with our indicator, at least has to touch this floating base, which gives us a lot of room to short and a lot of pips to go. So you can even take a look at it, and you see on the 4-hour chart from a few weeks ago, right? It reached that high of the month in January. And now it's starting to drop back down a little. It is going to continue long, but right now it just has to come back down and reset itself before it launches back up. Because we have the divergence here, 4-hour chart. Looks like it's going to form that. So, and this is how you recognize that pound as a major player in the Forex market is going to short. Now you're going to look for what's going long against the pound, what's strongest against the pound. And by using that same type of analysis method, you can figure that out too.
And the key is like, so you're zooming through these time frames.
Yeah.
We probably need to do a module or a podcast.
We're going to talk about multiple time frame analysis.
Yeah. This is like, it's the most powerful way to stay savvy. We'll just keep that for a different podcast.
Absolutely.
All right.
Yeah.
Let's wrap this one up, bro.
Yeah. All right, cool. Is there anything else you want to add about this? I mean, we know a lot of info, dude. So
it's
probably not.
So complex. Like I said, my only like key thing is like learn to walk first. Just get your consistency down. Just nail your 100 pips, 150 pips, 200 a week, whatever your goal is. Once you get that and you're like, hey, I'm 80, 90% accurate for like a year,
Yeah.
we start working on this stuff because it takes a whole different skill set to think. Like when you're thinking about what I'm going to do on one pair, right? If I've got four choices, you're not even thinking about a trinity of pairs. You're not thinking about three pairs at once, right? And that
Right.
that took, I mean, man, that took me forever. You know, I didn't have anybody like really. I
I
got a little
know, man.
PDF, bought a course, but I didn't get any coaching on it. It was like, here's the info, kid. Go figure it out, you know. And that's the shitty part is like nobody really explained it to me in these terms, so it got really difficult, you
I
know.
know.
You
Yeah.
just you tinker and you explore and you know
Until you finally get it right. Yeah,
you
man.
lose a
That's
bunch of money thinking you know it, you know.
oh man. Yeah. So I will encourage everybody, please master your initial method first or learn the Forex Lightning method with us so we can actually teach you how to like crush some pips. But guys, if you do have additional questions on this, you can actually, I'll let you email me. You can email me at kyle@travelingtraderpro.com. And I will get back to you and I'll answer some questions about fractional disparity,
Cool.
in a little more in depth. But guys, if you could like and subscribe to the YouTube channel, and if you're listening on Spotify, please like and follow the show so you don't miss an episode. If you could too, if you're an avid listener, you listen all the time, please give us a rating so we can get this in front of more people. The higher ratings we have, the more people that Spotify is going to put us in front of, and I would really appreciate that. Sammy would appreciate that. You can follow me on Instagram at That's Mr. Doherty to you, and you can book a free strategy session for coaching with me at travelingtraderpro.com or transformmytrading.com. Until next time.
Cheers, everybody.